Welcome to the Happy Cows Eat Smart podcast, brought to you by Novus AgriScience, where your dairy's business success is our passion. In our monthly podcast, we cover updates and insights within Federal Milk Order 33. Our team of expert ruminant nutritionists delivers research-backed, custom feed solutions tailored to your herd, because we know every farm is unique and no two solutions should ever be the same. We go beyond nutrition. Through robust tracking of herd metrics and financial benchmarking, we help you optimize costs, boost performance, and build profitability so you can focus on what matters: happy cows and a thriving business. So whether you're tuning in from your office or your truck, join us each month for insights, stories, and strategies that promote herd health, farm performance, and dairy success. Let's make your business thrive, one episode at a time. And now, Dr. Lawrence Jones will share his insights for Federal Milk Marketing Order 33.
Thank you, Ben. And let's go ahead and get started by looking at the statistical uniform prices that were released with your last milk check here. And it was around $20.75, which is actually not a bad price if we look back the last 7 years or so. It was a little bit higher in 2024 and also at the end of 2022 or so. Now, your statistical uniform price was kind of right in line with what I would call the middle. You were $20.75. The Northeast was $22.20. Now, Florida was $27.41, which was the high, and Minnesota, Wisconsin was $16.85, which was a low, and there was a $10 differential between the Class 3 dominant Minnesota, Wisconsin versus the Class 1 dominant Florida of 27. And there was also a large disparity as to how they actually changed this month. The average was 22 cents. You guys were up 82 cents. But again, the Southeast was up over $2, and Minnesota, Wisconsin was down, as was California. Class 1 price came in at $22.18. That was up $2.03, and this probably will be our high for the year. And if we add that $3.80 to it for you guys, your Class 1 was $26. Now, I've always had concerns about the new federal milk marketing pricing as what that's going to do for demand of fluid milk in the grocery store, but we'll see if that actually starts tamping that down or not. But so far, it doesn't appear to have done that. And the Class 1 utilization was down a little bit, 25. Very high in the Southeast, and again, you guys are just about 35% or so right there in the middle of the 30s. The big story right now in the industry are just cow numbers, because these things just continue to explode month after month after month. And right now, the estimate that I have for the June milk production report that will be out tomorrow or so is that we're going to add about another 22,000 cows. And overall, milk production should be up about 2.1% year over year, and fat production up about 3.5%. So tremendous amount of cows, tremendous amount of milk. Now, I do expect milk per cow to come down about a pound with the summertime heat of June, and that's exactly what happened last year. My estimate is largely based on the fact that we're just not calling very many cows. The slaughter data for June 27th was 45,146. It had a call rate of just a little under 25%, and that's about where we were last year at this time. So until we get up around 32%, this herd is going to continue to grow. And yes, we did call more than we did a year ago, but we have about 200,000 more cows. So again, we should have called quite a bit more. Right now, the dominant play in the market is the summertime heat and what's going to go on with milk production, because there was a tremendous heat that moved through the country and moved to the west, and now it's pretty well done. But ever since the 7th of July, the spot cheese price has gone up fairly significantly, and that's driven up the Class 3 price. We put this long-term channel in for like $1.50 to $1.65, and we're just pushing the top of that channel right now. We've not had $1.70 cheese since back here in November of last year. The flip side of having a lot of cows and a lot of milk is what's going to go on with consumer demand. So this is what the USDA released for May. It would suggest that cheese year over year was up just about 0.7%. And American cheese was down about 2.2%. I'm still a little confused as how they calculate the 1.16 billion pounds of cheese for dairy consumption, because in May we produced about 1.3 billion pounds We exported some, we put some in cold storage, and so for domestic, I have got about 1.13, so I'm a little lower than what they are. But I think what they do is actually look across a broader period and try to estimate that month. Now, one of the numbers that I track on here pretty closely is this 36.6 million pounds of cheese available for domestic consumption. When that gets over about 36, we tend to see lower prices, and in June it was 37. You could argue that domestic demand actually came up to support that, or did we have to lower the price to get that much moved out the front door? And that was the big question. Anytime that the export price in red here starts to approach the National Dairy Sales Report in blue, we tend to shut off exports. And I'll show you this data in a minute, but we were $1.85 for cheddar last month. Historically, we're running 7-8%, as far low as 6.9% whenever we've got a very small differential. And so one of the things that I'm concerned about is, are we going to raise these cheese prices to the point that we're going to shut off exports? And so here's that data for May. We won't get the June data here for about another 3 weeks. Overall cheese exports as a percent of production was down a little bit, and overall cheese was about 205. Large part of that is going to be Italian type cheeses. Cheddars, what we get paid on, was $1.85, and those exports actually came down also from 7.25 down to 6.37. Now butter was fairly strong. It came up, and the price was at $2.19. One of the things we can track a little bit in the future is the global dairy trade. This last one was down. We're going to have another one tomorrow. But cheddar was down 12%, butter down 5%, skim milk powder down 7%. So it was a fairly down day. And this would suggest that at $1.63 on the spot market, that we would not be exporting very much cheddar cheese into the world market. Now butter, we've always been a little bit low on that, and non-fat dry milk. This price is getting to the point that it's got a discount to global dairy trade, but we need to be like 20 cents under to export a lot of non-fat dry milk. And we look at the global dairy trade, it's kind of spread across the next 4 or 5 months. And so this cheddar price is October, November, December. So it would suggest later in the year that the world price could be down. But I think this next report is going to be interesting, because if it was down this hard, it might actually be up the next time. And so again, we're going to have to keep an eye on this. At the same time, non-fat dry milk has been coming off of the supply squeeze that it had. You know, we hit a high of 208, and I'd say now we're really kind of dropping back to the global dairy trade, which is in blue here. And generally, we're about 20 cents below that historically, even though that's not been the case since about the first of this year. If we look at the cheese production out of the dairy products report, this was on a tremendous upward trajectory here. We came down in 2024, but the cheese production that we had was actually the highest cheese production for May that we've ever had. And one of the questions that I keep coming back to is we're going to continue to see increased cheese production. Here are my estimates for the next year. So we're going to be at 41, basically 41 up until about October, when we're going to come up to 42. If we're not going to be exporting, 10, 11% of this cheese, then we're going to have an extra 1 million pounds a day to handle in the domestic side. And overall, we've been increasing the percentage of cheese that's Italian type cheeses. The American type cheeses have been down off of its trend, but cheddar is pretty much right on trend. And that's a reduction a little bit per year. And cheddar makes up about 28% of the total cheese. The other cheeses have been going up a little bit, and they were right on the trend line. At the end of the day, the question is how much actually disappears, and that's the difference between what we make and what we put in cold storage. We were very flat for a while. We've gone up. We tend to be flattening out just a little bit here. And we just saw this data a minute ago, but the real question is that the rolling demand, again, over the last 12 months, about 41 million pounds a day, and that's exactly what we're producing. This would also suggest that we only need about 9.58 million cows, and we're going to be pushing 9.7 pretty hard, I think, in the next month or so. So right now we're about 34 days of excess cheese, and we've been as high as 36, 37, and this has been trending down a little bit here for the last couple of years. Let's look at the prices that Order 33 received. I've got your overall price around 22.22. That's up 47 cents. Now, normally I show you how this compares to what USDA said, and they said you should be at 23.26. And I spent a fair amount of time trying to figure out, because this is the first time these two numbers have ever been off. But I think what happened is there was some really strange data in the Order 33 report, and then they came back and revised it on the 17th because these component numbers were not right. And I think they forgot to revise this. So I'm going to go with my 22.22 here. Fat pounds was actually down about 0.8 ticks, and fat price was down just a touch. So fat price is $1.69. These are the closes on Friday, so it looks like fat's going to be coming up just a little bit. That all depends as to how strong butter stays, but we had a low back here in January of $1.45 and a high a year ago at $2.84. In Order 33, fat percentage came up 6 ticks from a year ago. So again, this is just continuing to move up here. So you're up to 422. And that's very similar to what Minnesota, Wisconsin had. The high is the Northwest at 436. They're very, very strong. And Florida and Order 5 have been under 4%. Overall, fat came down about 8 ticks here to 420. Protein was down in terms of percentage as well as price. It impacted your milk check by about $1.13 to the downside. Protein prices came down 29 cents to 246. Still better than the low we had a year ago at $1.87, but off of the high we had in November at 301. And these are going to jump up significantly here in August. And I have some real questions as to what's going on here. Order 33 came up 9 ticks from last year. So again, continuing to increase components. And your 329 compares to the 346 out here in the Northwest, which they're just really strong on components. Other solids came up just a little bit on your milk check, about 2 cents. That was all due to price because other solids don't actually change. And again, there was just a slight uptick, and these appear to be coming up, but again, whey seems to be under a lot of pressure. So I think this is going to hang more in this 40, 41 range than 45. Those three together make up class 3. That came down 94 cents to 15.98. Going to come down here in July and then pop up significantly here in August. If we look at how this contract kind of moved for the last 6 months, it came down $1.20 from 6 months out, and it actually closed at its low at 15.98. It was as high as 18.65 here for a while. Now PPD came up fairly significantly, $1.76. And so there are a lot of different things that come into that. One is, how did the different classes compare to class 3? And we had like a almost $5 difference between 3 and 4, and a $9 difference between class 1 and class 3. So this would have suggested that the PPD should be at least $4 and change, and it came in at $4.77. So that was the biggest mover to the positive side of your milk check. Part of that was being driven by class 4, but again, that came down $1.36 to $20.96. That $22.32 is probably the high of the year, and the low was in January at $13.55. So class 3 has been rallying here for the last week. You can see where it came up in the close-up months, Friday over Friday. August through November, class 3 is ahead of class 4. And this is as of 10 o'clock. I always have to timestamp these because the market is so volatile right now. But again, you can actually see that difference here. And class 4 came down 36 cents this last week, Friday over Friday. What that all translates into a significant increase in protein price. Those came up 11 cents, again, mainly in the next few months. Other solids pretty much unchanged at a penny. They've kind of been moving around. And fat prices are pretty well at their lows, and they came down about 3 cents. Real quick turn to grains here. There was an up week on corn. We're up about $6 a ton. Got a channel built here from 150 to about 170, and we're right at that channel. So the opportunity to buy, corn at that 160 a ton is kind of evaporating from us here just a little bit. This was a down week on cattle, but the Oklahoma report would suggest that feeder cattle out there are starting to push $5 again. And then finally for weather, as I said, this heat has really kind of moved off to the northwest, a little bit to the south, and we've really begun to cool down here. And so order 33 should have a fairly cool week here this next week. I know we're looking at mornings that are pushing 48 degrees or so. We've got the southwest monsoons bringing moisture out west. We've got some moisture on the east coast. Overall, order 33 should be about normal. And when we look at the drought monitor, it very much looks good for order 33. All right, Ben, that's what I've got for you this week. And we're going to see how long this class 3 rally holds. And then, and it does look like class 4 is under a little bit of pressure here.
Thank you, Larry. Novus AgriScience hopes you found this information insightful and look forward to next month's installment.